Hi guys, welcome back to the Whole Coin Journey. As we know, Bitcoin's growing popularity has attracted many investors looking to diversify their portfolios over the years. Now, while buying Bitcoin directly from an exchange is a method that works for me, I appreciate the learning curve, the technical details, and the tremendous regulatory uncertainty can be intimidating for others. So what if you still wanted to gain that exposure to Bitcoin, but through more familiar channels? Bitcoin proxies could potentially help ease those concerns. So without further ado, here are some of the different ways you can acquire Bitcoin via proxies. So the first and most obvious Bitcoin proxy is MicroStrategy, or Strategy as they're now called. These guys pivoted towards buying Bitcoin as a strategic asset and hedge against inflation in 2020. So in this chart here, you can see the incredible accumulation by the company over time. One thing that you can seemingly rely on, regardless of a bull or bear cycle, is Strategy accumulating Bitcoin, regardless of market conditions. At the time of checking, Strategy currently owned close to 600,000 Bitcoin, accounting for more than 2% of the total Bitcoin supply. As of now, it correlates very closely to the Bitcoin price and has become quite volatile because of it. At the time of recording, one Strategy share price equates to about 0.0037 Bitcoin, or 370,000 sats. There is also heavy rumors that MicroStrategy will soon be inducted into the S&P 500 index, meaning one of the leading indexes for company funds will now indirectly include a Bitcoin reserve-based company. What an incredible achievement that is. This could potentially be a great way for you to gain exposure for those who don't wish to hold Bitcoin directly, and most importantly can be accessible through a stocks and shares ISA, for example. Another way to indirectly gain exposure to Bitcoin is Coinbase. Although not as closely correlated to Bitcoin as Strategy, it still offers an indirect exposure. For those who don't know, Coinbase is a publicly traded crypto exchange that is a platform that focuses on allowing users to buy, sell, and store cryptocurrency. Coinbase earns revenue mainly through transaction fees when users buy and sell crypto, as well as custody services like staking. As you can see via the chart here, Coinbase is closely correlated to crypto bull and bear cycles. Naturally, Coinbase largely grows higher in crypto bull runs. As a leading exchange, they receive revenue, which you would expect to increase during bull runs when more people are trying to buy cryptocurrency. Make no mistake though, that Coinbase still does make money regardless of a bull or bear market because of those transaction fees. So we tend to see here that coin stock often rises when Bitcoin price increases. While it's not a perfect correlation, it can be treated as a leverage proxy because of their use case of buying and selling crypto for users. It is important to remember though that it is a business, and therefore you are investing in the business and not directly in cryptocurrency. So the risk reward dynamics do differ. Next up on our list are Bitcoin miners. Investing in Bitcoin miners essentially means buying stock of the publicly traded companies that mine Bitcoin. Instead of profiting from solely price increases, these companies generate revenue by doing just that, mining Bitcoin, which ties their performance to number one, Bitcoin prices, but also their operational efficiency. Stuff like energy costs and how low their management fees are. We can't talk about miners here without making a mention on how they relate to Bitcoin in the first place. So as a thought experiment, let's imagine Bitcoin is like a huge digital treasure hunt. All over the world, these powerful computers, or miners, are racing to solve maths problems. The hash rate, as outlined in this screenshot here, is just a way of measuring how fast all these miners are guessing to solve these puzzles. If you can think of the hash rate as the speed and strength of the entire Bitcoin network trying to solve the maths puzzle, the higher the hash rate, the more miners are working, which means the network is more secure and also more competitive. So if the hash rate's going up, it means more miners are joining, or the existing ones are getting stronger. So what are mining companies anyway? Essentially, they're just big teams of computers trying to win Bitcoin by solving these math puzzles. If they win, they get paid in new Bitcoin. To run these massive mining companies requires electricity, computers, staff, cooling systems, all which cost real money. So why invest in a mining company? When you invest in a mining company, you're essentially saying, I think the Bitcoin price will go up faster than the difficulty of winning these puzzles. If the Bitcoin price goes up tremendously, the rewards that mining companies get in Bitcoin will be more in dollars or pounds. But if the hash rate goes up in comparison to the Bitcoin price more, then it means there's more competition for these puzzle rewards. So if there's more competition among miners and the Bitcoin price remains low, then over time the Bitcoin reward in fiat currency is less, if that makes sense. So it's kind of a trade-off. When you're investing in these mining companies, you're making a bet that the Bitcoin price will rise fast, but the hash rate or the difficulty to mine these new Bitcoins will remain the same or not rise as fast as that Bitcoin price. If you're right and the Bitcoin price rises extremely fast, but the competition is still low, you can make some big profits because the mining companies that you invest in are earning more Bitcoin per the difficulty to mine. Conversely, if the price drops and the difficulty stays the same or increases, the mining company that wins those puzzles are earning less Bitcoin for the work that they're executing. Think of it like the reward in which you are getting for your output. You still have to have those same high operational costs like staff or electric. So you can end up in a bad investment. Overall, investing in a mining company is a bet that the Bitcoin price increases faster than the mining game that gets harder. As a general rule, you're better off in mining if you believe that Bitcoin's price will increase faster than the network's hash rate over time. As you can see here, the hash rate has tremendously increased over the years, which means now it's more difficult than ever to accumulate Bitcoin rewards for these mining companies. However, we've also seen the Bitcoin price increase exponentially as well, which means that it still could be a profitable investment for those willing to invest in mining companies. Now, I'm not sure where it goes from here, but if the difficulty remained the same, but the price continues to appreciate, could be a lucrative investment. So one final option I researched here was ETFs, or exchange traded funds. Essentially, these allow investors to benefit from the growth of multiple assets without actually having to purchase those individual assets directly. While Bitcoin ETFs specifically are available in other countries like the US, there is still some regulatory issues in the UK for Bitcoin-based ETFs. So as of right now, at the time of recording, Bitcoin ETFs like iShares Bitcoin Trust or IBIT isn't available in the UK. Most recently of June, however, the FCA said it was proposing to lift the ban on Bitcoin-based ETFs. So while we wait for this ban to be scrapped, anyone who does want exposure to cryptocurrencies via an ETF has to do it via different means. A couple of options you have here are to invest in the cryptocurrency sector more generally. There are, for instance, funds that hold a range of crypto-related investments. This way, one benefit is that you're diversifying your assets not just in cryptocurrency, but in tech-based companies as well, which could mean less volatility and less severe loss. A few such funds here are the VanEck Crypto and Blockchain ETF and the iShares Blockchain Technology. Taking a look at these portfolio pages on the respective ETFs, they don't invest in crypto directly, but again in proxy, very much like the same methods I've explained previously. You see here companies like MicroStrategy and Coinbase, as well as companies like Mara, which utilize surplus energy to power data centers. Other options here are like CleanSpark, which are a Bitcoin miner. The funds here also stake in businesses less directly tied to fortunes, such as Nvidia. This could be a potential way for investors in the UK to have exposure to the cryptocurrency sector in general, which could offer a little bit more security than investing in Bitcoin directly. Overall, there are a number of methods that I've explained here which gain exposure to crypto in a few different ways. As time goes on, people in the UK may have direct access to Bitcoin ETFs. That could also offer another avenue for investing. You have a few choices here. For me, the ownership or the custodial ownership means that I'll continue to invest in Bitcoin directly. But let me know which method suits you in the comment section. Thank you very much for watching. I'll catch you in the next one.